The views and opinions of this program are those of the hosts, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. Well, it's a pretty tough way to start the week on Monday. The wheat complex under pressure from the open. That pulled corn lower, it would appear, and the soy complex also found some red on the screen Monday. Meantime, another solid day in cattle and hog futures to start off the week. Joining us to take a look at the markets, John Heimberg with Total Farm Marketing. John, good to catch up with you this week. And let's start with that graded oilseed side and get the bad part out of the way first, I guess I would say. What on earth happened on Monday? Was it just funds, more sell pressure from the algos and, path of least resistance to the downside? I didn't see a lot of fresh news to really impact the grain trade on Monday, John.
Yeah, it was definitely a disappointing way to start the week, especially in the corn and the wheat markets. In terms of its trade today, I think beans just kind of fell under the weight of everything else here. They tried to hang in there the best they could, but sellers took in at the end at least and pushed November to its lower levels for the day. But you kind of hit the nail on the head. There really isn't any fresh news to feed the bull side of the equation. We all walked away Friday feeling pretty good, up 10 cents on the week, talking December corn here. Again, little touch of maybe some drier weather in the forecast last week, and we continue to see decent export sales, good enough to be push the market higher, good shipments, those things out there. So kind of just felt like that, hey, this market maybe found some footing. We got a double bottom on the chart here with that low last week, and maybe we can get some gravitation out of it and get higher. But here we go today. We failed at 450. And it just seemed to bring the tech sellers into the marketplace. We tried to get December corn through that level, just couldn't find a way to get through there. And then the sellers kicked in. Throw into that a little wetter forecast. We got a couple different weather models that aren't agreeing with each other right now. But it did turn things a little bit on the wetter side, and that just seemed to be the trigger, even despite some pretty good demand news today. Now, here we go. We gave back basically all the gains from last week on new crop corn. Down 11 and a quarter cents on the close. We were up 10 and a half last week. So again, it kind of leaves us in this limbo land. Like, are we just going to continue to break? Was this a one-day anomaly? A lot of things in there. So again, kind of a head scratcher, disappointing day. There wasn't any big news to trigger this, but it just felt like the technical side and the long liquidation after last week's little rally kind of just bailed this market to the floor.
Thinking about December new crop corn, if we break 430, say that happens this week, is it look out below if we break that psychological mark, John?
On the technical side of things, and you start putting some lines on long-term charts and all those fun things that we talk about, this 433, 34, 35 area can be a spot that can hold us. It has held us multiple times. Don't forget, we tested this back in July. We tested it, in October. Now we're here testing again, and it just seems to be a spot that can kind of at least put a bit of a floor under new crop corn. If we do break this and we take out those December, July lows or October, December, July lows, or August lows, excuse me, can't talk today. That opens us up to sub 4. It really does on the longer term charts. Is that merited? I don't know. With the demand pace where we are, we do have improved global supplies of that big Brazil crop coming in. But, if it gets down there, it will be cheap in my mind. And maybe that's what this market needs to get to. We got a counter seasonal sell off here. Typically, this is a window we start peaking about now. But we're pushing it lower, that maybe we put ourselves into a July low situation. Then start realizing maybe the crop is as good as we think it is and turning around from there. But the biggest thing is right now, the money is in control. You mentioned the funds, 150,000 plus short contracts, big week of selling last week, even despite finding a little bit of stability. Again, that's based off of Tuesday's numbers. We did have some buying on Wednesday, Thursday, Friday, so right now we're probably back down there. So we'll have to see. It's really kind of a crossroads area if this market wants to really find some footing and climb. Or, unfortunately, we got the room to break and take another 50 cents out of this thing if it wants to be that aggressive.
Well, and I think about this too, John. Soybeans, we saw a little bit of selling there by funds last week, adding to their short position. The active selling in wheat Monday after we've had a pretty good rally the last couple of weeks in this wheat trade. I guess it just makes me think about that, as much as we want markets to be bullish all the time, they don't always have to be bullish, John, right?
Very much so. I mean, and a lot of the seasonals and the histories and all those things kind of getting thrown out of the water this year. And the last couple of years, actually. Just some of that's the influence of the South American supplies hitting the market when they do. This is a window we should see corn prices rally. But unfortunately, here comes a monster Brazil corn crop to make the market feel very comfortable about corn supplies globally. And, we've become more of a global market than we have been in the last 10, 20 years. So you kind of got to take all those seasonals now with a grain of salt. The one market that's actually hung in here pretty doggone well is soybeans. And you go look at the soybean market and you look at the fundamental picture on the global scale, it's not very good. I mean, we're still going to have a massive supply of beans out there. We have no bean sales on the books for 2025, 26, which is the same as last year in this window on a 20-year low. But with that, bean prices seem to be hanging in there. On a day like today, they were still at least got some stability to them. Some of that's driven by oil. Some of that's driven by the small crop size potentially coming at us. If there's any concerns on weather there, it gets pretty tight pretty quick. But, you're still looking at a market where Brazil last year has got 15 million tons less beans available, and that turned on the demand targets for us in the fall for U.S. beans. Is that going to happen this year? And I guess the same thing's out there on the corn side. So it really maybe just is the factor that the fund traders are looking at this picture. There's nothing really really bullish in terms of weather going on right now. Yes, there's pockets are too wet. There's pockets are too dry, but it's not an overall concern. And then throw in there the fact that the world can go to South America as still in the U.S. and get decent supplies, that this market just doesn't feel uncomfortable with where we are at this moment in terms of the availability of corn, soybeans, and even wheat.
Let's talk livestock. That was a better picture on Monday. Futures had a good day, cattle hog wise. I know last week's cash cattle trade was super strong once again, John. And, this cattle trade, right now, it just doesn't feel like it's showing any signs of slowing down.
No, we've got some pretty good strength here. Now, today was a bit of a choppier day. We did a June first notice day today. So anybody long June futures now is at the risk of delivery, which maybe with the lack of supplies, it's not much of a fear. In that regard, we haven't seen a lot of deliveries against that front month contract. But that's one of those days that we do see some choppiness in the marketplace. And that came after, obviously, a really good close last week, fueled by that strong cash market. Now, just some of the chatter out there, when we shot cash continues higher this week, so we'll have to see how that plays out. One thing, too, we just got to watch. When April hit first notice day, it rallied 13 out of 15 sessions into expiration to catch itself up to the cash market. Now, don't forget, we did come right off the April tariff issue and a hard sell-off in cattle for a couple days before we hit that first notice day versus June's been on a bit of a run going into first notice day. So it may not be as same type of effect, but you're still looking at Northern cash trade 240, maybe some rumors of 245 this week. We'll see if that materializes. I know there was some 242 bids that were getting passed on at the end of the week to challenge the market to go higher. But then you still look at Southern deals, 230 plus again. So there's still that premium over the board here that's going to pull this market higher if that cash trade continues. So on top of that, though, the biggest thing I'm watching right now, it's got me a little concerned in the cattle side, and probably shows up at a cold storage report somewhere. Mm-hmm. Brazilian beef imports, record levels. Australian beef imports at record levels. Now, a lot of that goes into trim and those types of cuts, but it just builds that supply. And we do have a little bit of a growth in numbers because of when we did open that Mexican feeder cattle ban up in the winter there for a few months. Those cattle got in, and they're going to start showing up in September, October windows. So there's some windows there. Also, we start seeing cattle numbers move up. We got decent supplies of imports. Does that turn into a trigger point? So something to kind of watch going forward is how much that beef we're bringing in. But again, right now the market looks very friendly. Feeder cattle prices in the cash market continue just to rock and roll too. As long as that band's out there for Mexican feeder cattle, it's going to be tight, and we're going to continue to see some push there. I think in terms of that market, still wanting to trend higher.
Is the strength in cattle maybe supporting the hog market a little bit as well here, John?
I think so to a point, but then also on Friday last week, we had a big jump in summer hog retail prices. We pushed up to 107 on carcasses, and that fueled into that July rally, pushing us up to 107 on the board here in July. Starting to feel a little long in the tooth that maybe that hog contract's getting out over its skis. Might be a window we start thinking about a spread of selling the summer versus the back months. Pretty big value in July over in October or December here. And you saw that kind of play in the market today. Biggest problem in June is expirations coming up real fast. We got the discount to the index. That index is climbing, but we got to get it moving a little faster. That could keep a little bit of a limit on the front end here. But how far can we take a July contract out at 107? So that's something we're kind of watching as we move into the last few days of the contract life, and then July becomes the new leader in that regard. So, but we have the fundamentals are there. Cash market continues to trend higher. The index trends higher. Big jump in retail. So it's an interesting point. But typically, we do find a summer peak in the hog market in cash as well as retail prices. It's never really a set day. It's somewhere between the 1st of June and the end of August. So we'll have to see. But it feels like maybe we're trending to that peak here, at least with the action that we've seen in that July contract last couple of weeks.
John, always appreciate the time. Final thoughts, anything you'd mention, reiterate for folks here on the show this week? Upside versus downside in the grain markets, producers, you got bushels. That's your upside. And maybe this is a window you draw the line in the sand and use your put strategies. I know guys don't want to make cash sales here, but there is still the threat out there that 438 turns into 380. And that's a concern point for me. I would rather sit on some nice 420 puts, nice and cheap, make sure I got a floor, let the summer play itself out and see where you are at the end of this thing. So don't be afraid to just lock in some value. Again, the cost of doing something sometimes is a lot cheaper than the cost of doing nothing if where the market were to go against trends and kind of fall apart. John, if folks want to reach out for a conversation with you there at Total Farm Marketing, how can they get in touch? Feel free to give me a call, 800-334-9779. Shoot me an email at johnh@totalfarmmarketing.com. And don't forget that website of ours, totalfarmmarketing.com. Always appreciate it. And I know you will be out next week on a much-deserved vacation. So until next time, John Heinberg, Total Farm Marketing. Good to hear from you, my friend. Thanks so much, and we'll talk to you again real soon. Sounds good. Have a great week, and talk to you in 2 weeks, and hopefully bring back a nice little limited walleye. Hopefully you definitely do that. John Heinberg with us here today on Market Talk.
Make sure to subscribe to the Market Talk YouTube channel. You can watch our latest interviews with top market analysts in the country, find bonus content, and much more. It's easy. Just go to youtube.com/@MarketTalkAg and hit the subscribe button. Or you can search for Market Talk Ag on YouTube.